Hi everyone, today is Wednesday, January the 19th, 2022. And now I will review James Rickards' second book in his Four Horsemen of the Apocalypse type of series. First one being Currency Wars, second one, The Death of Money, the third being the Road to Ruin, and the fourth being Aftermath. Now, Death of Money was released in April 2014. And I must say, out of Currency Wars, Death of Money, The Big Drop, which is a book that was not publicly published, The New Case for Gold, Road to Ruin, among these books, initially, the death of the dollar, the death of money, sorry, not the death of the dollar, though he does describe quite a bit of that too. The Death of Money was, in some ways, my least favorite book the first time I listened to it. And the reason for that, I kind of became aware of my internal perhaps biases, or like what specifically was it that was bothering me only when I listened to it for the second time. So if you do listen to this book and it kind of annoys you the first time, try to pause, reflect on what it is about the specific things that is annoying you, and then go back and listen. For me personally, I felt like okay, I'm not like super pro China here or anything. I just just putting that out there. But I feel like in some ways in this book he's so harsh in his words about China, about their lack of bond market and all that. That like if I would think like I'm a Chinese person, I might get upset by that. And so I was like, do you have to be that harsh? Do you have to? And then he also, he was talking about Edward Snowden at one point, and he didn't just say, the things that Snowden revealed. He said the things that defector Edward Snowden revealed. And that kind of ticked me off because I personally don't see Edward Snowden as a defector. I actually like Snowden. I think what he did in terms of, making Americans more aware, and the world actually more aware of how much data is actually being mined from us. The fact that he made people aware of that, I think, was a public service. I personally don't like the idea that he has to hide out in Russia just because he cannot get a fair trial, because just by default of him turning up on U.S. soil, his trial would essentially be an unfair trial, because it would be like, okay, you're a traitor, you're done. Like any of your arguments are gone. So I don't think that the fact that his intent was true. I think that the fact that that's not considered is the reason why he has to be in Russia, and I think that that's not cool. And so I think my pro Snowden-ness kind of is what just him, Rickards just saying defector Snowden, da 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 da. It's just like it just like irked me. And then also some of the critiques that he has made about sort of China's growth story, and their what is that? Was it called the Chinese miracle, or the miracle of China growth, or and all their quote unquote malinvestments in. Again, I'm saying quote unquote malinvestments. He refers to these things as malinvestments. Their beautiful railroads and their high speed rail and whatever. So he calls all of that malinvestment, and that kind of annoyed me, because I was like, yeah, I think actually they're doing the smart thing by taking their, the U.S. Sort of currency that's depreciating and putting it into hard assets, basically. So I felt like that was like an internal contradiction, because Jim Rickards is very pro hard asset investment, and so the fact that he didn't see China's move as more strategic, and well, maybe he did see it that way, but just was taking a swing at China in this book, I don't know. But the fact that the book makes it out like he's critiquing China's investments in hard assets as malinvestments, while he himself thinks that he's very pro hard asset investment, that kind of and I feel like he was just doing it because it was China, because he is very much so a patriot, which I appreciate. But in some ways, I feel like it's important to think like Ray Dalio in some ways, and consider the whole picture. And it almost felt like in this book that whatever China was doing was wrong and bad because it is China. And it was almost like, if US did the same thing, he'd be like, yay, So that's why I was a little bit ticked by this book the first time. So me being me, if I dislike something or if something pisses me off, I go towards it. And first I introspect and think, oh, what was it that ticked me off? And I figure out the specific things, and then I go towards it to understand, okay, fine, now that I've processed how I feel about these things, let me see what gems are there that I perhaps did not look at the first time, because I was annoyed about whatever else. So the second time when I listened to the book, I found a host of brilliant things that he has said there, notwithstanding his critique of China, notwithstanding the fact that this whole malinvestment business, because he does even talk about how the whole US student loan thing is a malinvestment. I completely agree with that, because I kind of begin to listen in for the places where he has balanced his China critique with also a US critique. Nevertheless, again, this book is also beautifully poetically written. In The Death of Money, he does talk about the death of the dollar, because as the dollar being the linchpin as a world reserve currency, he posits that the death of the dollar would be the death of money per se. However, he does talk about how the IMF and would sort of bring in SDRs to kind of take over that role of the dollar. Now, this book was written in 2014, and I think that forecast of his was pretty brilliant, because they are now, this past year in 2021, I know that the IMF issued some, I don't know how many billions, some hundreds of billions in March 23rd, 2021. And then again, August 23rd, I believe, they issued $850 billion worth of SDRs. And if you wonder what is an SDR, an SDR is like if you think about the money layers, they say M0, M1, M2. They talk about all these concepts of money supply, right? To the layperson, what is the dollar, right? The dollar is, what is it? Is it M2? Is it M3? I don't know. I think it's M2, isn't it? I have no idea. But then there's credit, which is M3. So it's like derivations upon derivations upon derivations. And if you look at a dollar bill, it says Federal Reserve note. And what is a note? A note is a debt obligation, or that the Federal Reserve has created backed by the Treasury bills. And then what is a Treasury bill backed by? The full faith and confidence of the U.S. system. Okay. He addresses that in chapter 6 or 5 or 6. Chapter 6. So he talks about, what is trust, right? And all of that. But anyway, so this book, I think, in order to get some of the more theoretical concepts, such as complex systems, phase transitions, signal amplification, all those things, I think you must listen to or read Currency Wars first. Because, and if you listen to Currency Wars and then you follow that up immediately with Death of Money, it's almost like a textbook left off, in teaching you something about complexity theory, and then it picked it up right away. So I think that kind of part 2 aspect of it is beautiful. He describes sort of the beginning of the book is very lyrically and beautifully described his experience in Italy during the late 1970s, during that time's collapse of the U.S. dollar and the loss of confidence. In part 1, he really talks about money and geopolitics and the 9/11 attacks and the insider trading that went on. And he talks about this interesting concept of signal amplification, which means that sometimes when you as a trader make a trade, you make a trade because you see something going up, and so you pile in, and that is a signal amplification. So even if somebody say shorted the American Airlines stock before the attacks, the whole pile-on of things that happened after that, they are all kind of amplifiers, but it's important to get to that root. He describes a sort of like a secret cell that he was involved in to kind of study this. And he also describes like how it kind of got shelved. That aspect of how he describes it, it almost reminded me of as if he was Harold Finch in the Person of Interest series, Person of Interest TV show. I love that show. But not Harold Finch, maybe the other guy, who kind of inquired, the CIA guy. But because he describes how this, how their kind of project of looking into this signal amplification system in markets, how they began to study it using behavioral methods, and how it was kind of shelved because of concerns of privacy, and because the government didn't basically want it to be seen as them looking into people's 401ks and that kind of thing, which is in the context of which he mentioned Snowden, and so okay, perhaps he had some personal issue with Snowden too, because like his project got shelved because of what defector Snowden did. Anyway, so that was interesting. He has some like beautiful quotes also from other guys, from Friedrich Hayek, from Adam Smith. He has this excellent excerpt from Ben Bernanke, which completely describes the insidious and dark and dirty nature of how we have all been kind of psychological ops wise, psychologically incentivized to into this albatross of high risk investing in order to get yield, as opposed to like the normal the conscientious way of saving, investing, and getting the fruits of your investing and returns, and that kind of being completely twisted. He gives this beautiful quote from Bernanke's, and he says that this quote is the Rosetta Stone. It's the the means of translation of all of Benaki's moves going forward. And I'm going to read it out because I wrote it down because it was that terrific. Like I was like, okay, gotta read that. I gotta look at this later to gotta keep it like a framed picture anytime we're pushed into higher risk things. And you should listen to the weird and circuitous language in which Bernanke writes. It will pay to invest when the cost of waiting exceeds the expected gains from waiting. The expected gain from waiting is the probability that new information will make the investor regret his decision to invest. The motive for waiting is the concern of the possible arrival of unfavorable news. Didn't it make your head just spin? Like all these words? Like, I just made my head spin. I was like, wait, it will pay to invest when the cost of investing exceeds the expected gains from waiting. Okay. So it's not going to pay me much to wait, i.e. zero interest rates, right? Or very low interest rates. The expected gain from waiting is the probability that new information will make the investor regret his decision to invest, meaning expecting bad news. The motive for waiting is the concern that of the possible arrival of unfavorable news. Yeah, the SHTF basically. And so in that sense, this and then he describes it in the context of this whole BS notion of forward guidance. And then he talks about risk and uncertainty. And risk is, basically the concept that an investor can apply a known probability to an event and then make the decision to invest. But uncertainty is even, it's a random outcome with unknown probability. And those two, that difference between risk and uncertainty is something that I think we all need to ponder, because what's happening lately is like we're herded into this albatross of ridiculous investing. It's almost gambling. It's not even investing anymore. It's gambling, and it's because of this difference between risk and uncertainty that has not been properly the definitions of those two words have been so mucked up that it's hard to parse them both out. Now, the most valuable bit from this book, I think, well, one of the most valuable things, because there are many when I listened to it the second time, is his case, the case that he makes for the euro, or for the survival and strengthening of the euro. Now, mind you, this book was written in 2014, and he goes quite a bit into the history of Charlemagne, and let's see, I wrote down quite a bit here because it was quite beautiful. Yeah, the way. So Charlemagne, that happened. Charlemagne was around in AD 814, or no, it ended in AD 814. But basically, this conglomeration of kingdoms that happened during Charlemagne's reign is sort of very similar to the EU of present day. And he talks about how Charlemagne really pioneered quantitative easing by introducing the silver standard, so a cheaper standard basically than gold, but he was kind of the pioneer of that whole thing, and he really draws the parallels between the similarities of Charlemagne's reign and the similarities between the present EU, meaning like the tendency of so Charlemagne had this thing where you don't unnecessarily force like uniformity on everything. You allow diversity, as long as it pushes forward that common agenda. and you only switch it over to uniformity if that diversity grossly challenges that order that you're trying to like keeping local customs and only applying standardization if it serves the greater good, or it serves the the EU kind of motives. And he talks about a lot of like currency manipulations, let's just say, in the euro that occurred between 2011 and 2014 time frame, that prove that the proof why the euro is being preserved, because it's a political, it's the need for it is political, the need for it is not financial. And he really talks about in this book, Currency Wars, about how, I mean, not Currency Wars, sorry, Currency Wars was the previous book, but so many of the concepts are like taken further. In Currency Wars he talks about how and I have made a review about Currency Wars. In Currency Wars, he really talks about how when a country is playing a currency war, the goal is not financial gain, but the defeat of the other person's financial markets, and how it costs you like these many millions of billions to wage a war. So even those like lost investments of the person waging the war are considered as cost of war, basically. So they don't really care about like that, oh, I'm going to play this and my currency should gain more. No, that's not the agenda of a currency war. And so in that sense, he describes how the euro has a case for remaining, and I wouldn't say remaining strong, because it's sometimes strategically weak as it is right now. And I know this because I've been following the charts, the currency charts, and the dollar, USD, euro, USD, CNY, and euro CNY. And if you want to know more about this, I highly recommend looking up a guy by the name of Francis Hunt. He has 3 channels on YouTube: The Market Sniper, The Crypto Sniper, The Reset Sniper. But just look up Francis Hunt currency charts, and you'll find something, and especially the euro stuff. Yeah, it's well substantiated. Yeah. Oh my goodness, my video is long. I went off on a tangent quite a bit, maybe, or went into more detail than I was initially intending to. But in chapters 6, 7, 8, in chapter 6, 7, and 8, he kind of goes into the unsustainability of the US dollar debt, and really the case then for how the IMF is kind of positioning itself as the central bank of the world. He also reveals some things that I did not know, actually, that Obama supported in, was it 2014 or 2011? Or maybe, no, he supported this in 2009 or so, kind of backed off from it in 2011 because of the election. I did not know about all these things because I was too busy having a career and birthing my 3 children. So I didn't. So it's interesting that while I was having a career in finance, that I was not reading these brilliant books on finance and the macroecon landscape. But nevertheless, so I didn't know that he actually supported something that would have grossly sped up the devaluation of the dollar. And in his letter, Jim Rickards states this letter, and I highly recommend you check out that section. It's between chapter 6, 7, or 8. He describes how this loan from the US to the IMF was a good idea because it's because of IMF's considerable holdings in gold. So basically, while they were pissing all over gold and trying to suppress the gold price for the regular citizens, they actually internally they knew that gold is money, gold is valuable, and by making this loan out, the incentive would be to really grossly devalue the dollar, because you'd get back currency in the other currency. So then you want this one to go down and the new one coming in to be the stronger one. So you're kind of incentivizing the idea of inflation. And I thought that was pretty dark, because I don't know about you, but I kind of liked Obama. But yeah, so his wow, I've really begun to think quite a bit in these past 2 years. No, maybe the past 3 or 4 years. Yeah. Anyways, where do I go from here? Because there's so many different, notes on each of his. You know what? Yeah, I'll go into the 7 signs. He talks about how, in this book, he kind of, in his concluding chapters, he talks about keeping an eye out for 7 signs of the death of money. He says, not all 7 may happen, but if some of these begin to happen, just, keep an eye out. And he talks about the one sign is the price of gold, either like a double jump kind of thing, as being like a sign that of a vote of no confidence in the dollar, or a sharp crash, sort of like happened in, now he wrote this in 2014, but this sharp crash that he talks about, it actually happened on August the 8th and August the 13th, like, or 5th or 8th, or 5th or 3rd, or 8th and 13th, that kind of Friday and Sunday nights in the year 2021. This actually happened. Gold crashed really bad. It was called the Great Not-for-Profit Sale. And it happened right when those SDRs got issued, the 850 billion SDRs. So he talks about watching for that as a sign, and like a sharp crash like that also. So I thought that was pretty, prescient, pretty, what is the right word for it? Like foretelling? It was very forecasty like. That's not a real word, but I don't know the correct vocabulary word for. It's not prescient. It's very like a soothsayer, anyways, you know what I mean. Second sign, continued buying of gold by central banks. Oh, hello, that's been happening. Imf Governance Reforms, that happened in 2015 actually, and it happened again in 2020. He talks about other kind of bond, or like centralized global bond type things in whatever form. And oh my god, this completely lit a light bulb for me. The green bonds, the green bonds that are like they kind of not like they capture carbon credits, but the green bonds are like the forced, not forced, they're voluntary, but that kind of voluntary. So the green bonds are things that you have to buy, companies have to buy to prove that they are ESG compliant. Like, so much for like really limiting your carbon footprint and consuming less. No, it's not about that. It's about virtue signaling, doing the right things, such as buying green bonds. And green bonds are like the ultimate global bond market, if you think about it. And he mentioned that as the third sign for a failure of regulatory reform. And I was like, oh yeah, it's not only failure of that reform, but actually the derivatives market has actually gone much worse. 5, system crashes. Watch for an increase in tempo of pipeline issues, supply chain issues. What was that pipeline thing that happened last year? I forgot the name of the thing, but some pipeline. Watch for the end of QE And for a time when the feds begin to unwind their balance sheet, and that was like ding, 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 ding. That's like, I mean, that's what they said they were doing now, unwinding of the balance sheet. And number 7, I think, already happened. He says, watch for a Chinese debt default, debt collapse. Evergrande is all I gotta say about that. And he says, not all may happen, not all in the same order, but these are the signs that that the end is near. Yeah. So absolutely brilliant book. Highly recommend it. Yeah, because it's I think it's more pertinent now than ever. The things that he has stated in this book, and also the sort of protection strategies, which I would say he goes much more into the protection strategies in is it the in the I think, let me see, yeah, because I make notes on all of his books. In Road to Ruin or Aftermath, I think it's the Aftermath, the 7 strategies to, like, to preserve your wealth and all that. Yeah, so in Aftermath, really, he really talks about how to protect yourself. But I think, all of these books are very, very worth reading, and worth following for your own sort of self-preservation, I would say. So with that, thank you for listening. Have an awesome day. There are a few more books that I managed to read during the winter break, and I will be uploading those as soon as I have more time. But for now, I think I'm almost done charging, so I'll bid you farewell. Bye.